All right, we are ready to get started. Thank you all so much for being here today. We are talking about finances today. So fun. So the name of this webinar is obviously Your Blueprint to Church Accounting. It is presented by Ministry Brands, and I'm Jessica Moore. I have done a handful of our webinars here, and we are thrilled that you can join us. Joining us today is Mark. I'm going to talk about him a little bit more in a minute. But we know that managing finances for a church can be complex and it can be time consuming. So we're here to help. Not only do we have tools to help you streamline your accounting processes, provide you, but we will also provide you with a blueprint for success. So that's what Mark's going to walk us through. He's been helping churches implement best practices and processes for years to guide us through. And so he is a key member of the Ministry Brands team. He's dedicated to providing innovative solutions to empower healthy churches, as the rest of us are as well here at Ministry Brands. So I'm going to let Mark introduce himself and also address why this webinar is particularly relevant to you who have joined us today.
Well, thanks, Jessica. And as she said, my name is Mark Crane. I've been with Ministry Brands for years now. And also, as she said, implementing best practices and processes all across the country with churches, working directly with them. And if you're a church who has been using Ministry Brands accounting software, you're already familiar with the quality and the dedication that we put into our products. But today we want to take it a step further. So during this webinar, we'll introduce you to a whole host of different topics aimed to empower you to handle your church's finances with precision and faithfulness. This webinar is designed specifically for churches. So if you're not in a church, you may hear some things that are a little different than what you're used to, because churches have unique challenges and requirements that other nonprofits or for-profit businesses don't necessarily have. So we're going to cover a wide range of topics, starting with an overview of the challenges we found in our decades of service that Ministry Brands has been working with churches in managing their accounting processes. Then we'll dive into the key features and benefits of Ministry Brands' integrated accounting software products, explaining how it can simplify your financial management and enhance your church's stewardship. I'll also share some practical tips and some best practices to help optimize your accounting workflows, ensuring accuracy, compliance, and transparency in all your financial activities. So Jess, how's that sound?
That's great. That is so much to cover. I'm so glad we've got you here, Mark. That's going to be so helpful. Now, if you are joining us today and you do not already utilize the Ministry Brands accounting software, you might be wondering, why is Ministry Brands different? Could they be right for us? And so we are going to unpack that a little bit, but just in general, Ministry Brands has a proven track record of empowering healthy churches with excellent technology. And we do have tailored solutions to our different churches, even to different groups. So we do also have a whole suite of Catholic products. If you are joining us today and you happen to be from a Catholic church, then we do also have software solutions even tailored to you. So, and our solutions can be tailored to NPOs as well. So either way, this particular webinar will be helpful to our churches, but we do love our software for this. It also integrates seamlessly with our other software solutions. So the giving solution obviously integrates with the finance as well as the church management. And so that's just going to eliminate a lot of manual data entry for you. It reduces the risk of errors, and obviously it simplifies your process. So that will allow you to focus on what matters most, and that's serving your community and fulfilling your mission as an organization. So I'm going to go ahead and turn it over to Mark, and he is going to dive right into our content for today. Again, thanks, Mark, for being here. Y'all, if you have questions, feel free to ask those questions. We'll be able to answer those for you. And if you are curious about our software solution, we obviously offer demos. We'll get a salesperson in touch with you if you're interested in finding out a little bit more about the product if you are joining us and you don't already have it. So without further ado, Mark, I'm going to pass it over to you.
What is church accounting and why is it different? Not everything is different between church accounting and standard accounting, but there are some very important considerations. The first consideration is that there is industry-specific knowledge that you will need to have on hand as a part of your knowledge in church accounting. For example, as a tax-exempt entity, your church must adhere to a unique set of regulations and processes to avoid fiscal backlash. There are guidelines governing your federal tax-exempt status and state and local requirements to navigate as well. Additionally, as opposed to standard accounting, you are primarily concerned with accountability and stewardship from the donations you receive from your donors. Businesses focus squarely on the bottom line. Your service to the community requires bookkeeping that prioritizes accountability for every dollar received. So at the end of the day, why does it matter? Those don't seem like a very big deal, but they definitely are. While most of the accounting basics are very similar between for-profit and nonprofit companies, how each employs accounting is a key differentiator. For example, for-profit businesses generally have a single set of assets, liability, and equity accounts, whereas many churches, perhaps like yours, may have more than one. Particularly, churches will be using something called fund accounting, which we will talk about in a future webinar. Now, there are three things to consider. First, your job is to increase confidence in your organization. Prioritizing accountability clears the way for instilling your congregants' trust that their donations, their gifts, and their tithes are being used appropriately. Additionally, your goal is to provide transparency. In theory, you could show any congregation member where their money goes at any point in time. Those both lead into growth contributions. Your growth is entirely dependent upon trust. That trust must be earned by doing the right things the right way and never hiding away the details of your organization. As we progress further into our discussion about what church accounting is and your blueprint for it, keep in mind that there are a number of topics that we will cover that will apply specifically to churches and will highlight the differences between the nonprofit status of a church and the for-profit status of a regular company. Part 2. What is a fund? This is a very important topic because fund has very many definitions that can be used throughout your organization. And we want to provide as much clarity as we can around the term, both as it is used internally as well as it is used legally. For our purposes today, we will be speaking of the word fund in its noun form. And there are three populations: donors, leaders, and accountants, who may each use the term fund differently. Let's first talk about your donors and how they may be using the term fund. And even within your donor population, funds can have multiple meanings. Funds can be just the amount of cash that you have on hand in order to meet your daily bills, fund particular projects and activities that may be occurring at your organization. However, they may also be used to using the term fund as a particular reason to give, a category to which they can earmark their contributions in order to support the broader mission of your organization. Now, your leaders have very much the same definitions, but may be using them a little bit differently. Of course, funds can mean cash on hand, but funds to them are reasons that their donors may be interested in giving, as well as the various dollars that have been collected and set aside for various purposes over the months and years that have progressed through your organizational history. This is somewhat closer to the way that accountants would see the term fund, and involves slightly what their definitions will also address. Because funds to accountants have very distinct meanings. First, funds, in terms of fund-based accounting, has its own two separate definitions that can be used. In general, funds can be used to denote separated balance sheets, each of which having unique bank accounts and other assets, liability accounts, net asset account balances, and income and expense designations that can be used for various different purposes. However, each of those funds are compartmentalized so that each one of them functions independently of the others. However, fund accounting has an entirely different definition. Fund accounting consists of a self-balancing set of net asset accounts only, and each are reported as either purpose restricted or not based upon donor-imposed restrictions. So as you can see, the simple word fund has multiple different definitions and multiple different ways of being discussed within various different parts of your organization. For our purposes, we will be adhering to the third set of definitions, those separated balance sheets or fund accounting itself. In part 3, we'd like to answer the question, what are the rules? There are many different rules that apply when it comes to accounting, and not all of them are simply accounting rules. You must also contend with the tax rules and implications of your church organization. To begin, it is important to understand that there are two organizations that set the rules around church finances, at least primarily. The first organization is called the Financial Accounting Standards Board, or FASB. The FASB is a private, standard-setting body whose primary purpose is to establish and improve generally accepted accounting principles, also known as GAAP, within the United States in the public interest. The Securities and Exchange Commission, or SEC, is designated the FASB as the organization responsible for setting accounting standards for public companies in the United States. Conversely, there are also rules that are set by the Internal Revenue Service. And of course, the Internal Revenue Service is the revenue service for the United States federal government, which is responsible for collecting U.S. federal taxes and administering the Internal Revenue Code, the main body of the federal statutory tax law. Now, churches occupy a very specific subset of both sets of rules, both within the accounting rules set by the FASB and tax code as administered by the Internal Revenue Service. It is important to know that we are not speaking to you today as your accounting advisor nor your tax attorney. Any specific questions should be routed back to those professionals who you have associated with your organization. So we would like to speak more broadly about what each of these organizations say at a general level. And let's begin with the FASB. What do their rules say? Well, as with most of the rules that they write, they say a lot. And in fact, the most recent rule that has been written was published August 18, 2016, at least in terms of rules that specifically apply to nonprofit organizations like churches. This standard was intended to simplify and improve previous orders that they had outlaid years before, specifically around net asset classes, expenses and how they are to be presented in financial statements, and some specific reporting requirements, such as with a statement of cash flow. And there are, of course, many other things that were covered by this rule, but let's speak specifically to these three items: net asset classes, expenses and their presentation, and the statement of cash flows. First, in terms of net asset classes, previously the FASB had set 3 classifications for net assets. There were unrestricted net assets with temporary restriction, and net assets with permanent restriction. In their 2016 rule, they simplified the 3 classes down to 2. Those 2 are net assets with donor restrictions and net assets without donor restrictions. The importance of the donor restriction cannot be de-emphasized. It is very important that you are following the donor's restrictions that they place on any donations that they give to you as a nonprofit organization. Secondly, expenses and their presentation. This specifically has to do with a type of report called a functional expense report, as expenses are now required to be presented by their nature as well as their function within the organization. And again, the rules around these designations become very nuanced and very important to understand. So we highly recommend that you engage with your accounting expert in order to fully understand what those new requirements to many would be. Thirdly is a change around statements of cash flow. Previously, you had to choose a specific type of cash flow statement and how the reporting of those operating cash flows were being tracked. Now you're given the opportunity to make a free choice between direct and indirect methods of reporting those cash flows. Now, what do the IRS rules say? The primary question that comes up in terms of churches is, are churches 501c3 charities? And the answer to that question is actually maybe. They can be, but they don't have to be. There is not a legal requirement to obtain 501c3 status. However, there may be reasons that you want to go for that. You don't, of course, because churches are assumed to be nonprofit by the IRS. However, there are some added benefits that you may obtain by obtaining that 501c3 status. The first is an air of more trustworthiness. Because 501c3 organizations are required to file tax returns on an annual basis, you're building trust with the broader community, even that outside your walls, by being transparent about the organization's financial handling. Additionally, there may be cost savings. This can be in your dealings with other businesses that you have to make purchases from, relationships that you establish, and your church may be able to take advantage of those savings based on tax-exempt status alone. Additionally, depending upon your state and locality, you may have additional benefits or discounts that allow you to funnel more of your funds into growing the church rather than paying them to taxes and fees at the state and local levels. And again, there are many different reasons that you may choose to go after 501c3 status, but these are 3 that pop right to mind. Part 4, we'd like to discuss a very important topic to most organizations, and it tends to be one of the more scary topics, and that is payroll. The primary question to consider in terms of payroll is this: will you handle it in-house, or will it be outsourced to a third party? This is one of the primary considerations of any accounting process, whether you will handle it on your own or hire someone externally to handle payroll for you. And the reason is very simple. Payroll can get tricky. There are numerous and constantly changing federal, state, even local laws that make things challenging to manage on your own. It gains more complexity because of the mix of individuals who are on a church's payroll: standard employees, contractors who are paid via 1099, volunteers, and ministers, and more. And all of them require varying degrees of record keeping. So let's look at the 2 sides of the coin. There are considerations for in-house handling of payroll and considerations for outsourced payroll. In-house, of course, you will need to keep up with the changing laws, and this can be intense and time-consuming. So finding a software solution designed with churches in mind is vital so that they can help you stay abreast of changes in the rules and regulations and laws around payroll. Outsourcing will allow you to engage someone else to do all of those things, and that would lessen the internal burden. However, you do lose control over confidential information, having to entrust that to a third party, and that third party may not be able to provide information to you in a quote on-demand kind of way. So you lose the convenience and you lose some control over confidential information. You have to place more trust in an outside third party versus maintaining payroll in the house. So we'd like to speak to one of the more common questions in terms of payroll processing. And that is, what do the IRS rules say around ministers? This is always a very important question because ministers don't necessarily know themselves, even though they're the ones who are forced to comply with it. And churches can sometimes have to deal with the consequences of that and make judgment calls on their own. Again, we will highly recommend that you engage your tax professional in order to understand the IRS rules in full. We simply want to provide an overview for you here today so that you get some clarity around what the differences in rules are, specifically around ministers. And that's because it is different for a minister than for standard employees. First, clergy members are considered to be self-employed. In most circumstances, this means the minister's income is subject to a self-employment tax, which can include the base salary, housing allowance, and a fair rental value of church-provided housing if there is any provided. Additionally, qualifying ministers can opt out of paying Social Security. Now, of course, they must file a form with the IRS within their second year that they earn $400 or more in ministerial income. Then there's the question of, well, who qualifies as a minister? Well, to qualify for ministerial status, the individual must be licensed, ordained, or commissioned as a minister, and then must administer the sacraments of your church, be considered a religious leader by the church, conduct worship at your church, and have management responsibilities within the church itself. Additionally, clergy members pay SECA. This may be a new term to you, but it is a separated law, the Self-Employment Contributions Act, and that is the law through which clergy members are subject for Social Security and Medicare. That is different than for a standard employee who is subject to FICA, the FICA. Because of this, churches cannot withhold half of the Social Security and Medicare taxes from the minister's paycheck. Ministers actually have to pay twice as much because, again, they are self-employed, so they pay both their side and the employer side of Social Security and Medicare taxes, as opposed to non-minister employees where the church pays the employer half and then the employee has their own withholding that is a portion of that taxation. So a basic question is, what can we do and what can't we do to help a minister? Well, in terms of FICA, the church cannot withhold FICA from a qualifying minister's compensation. That is not allowed. However, the church can withhold income taxes if the minister requests to do so. Again, whether you want to handle that process or not is totally up to you at an organizational level. You may want to fully give the minister control over their own taxation, as they're the ones who are responsible for it as being self-employed, as opposed to mixing and matching them with standard employees. Hopefully this provides you some clarity around payroll and at least start to answer a few questions that you may have. In this session, we would like to answer a very common question. Well, what are best practices when it comes to accounting? So let's name a few. Item number one is we should certainly stick to a numbering system. We like to refer to this as the 1, 2, 3, 4, 5 system. It's very commonly used not just in churches, but in standard businesses as well. The way that the numbering system works has to do with the beginning number of each type of account that you have in your accounting system. Assets should start with the number 1, liabilities with the number 2, net assets or capital accounts in the private sector start with the number 3, income accounts start with the number 4, and then expense accounts start with the numbers 5 and up from there. Now, of course, there can be some variations on this numbering system, and you may need to tweak it in order to fit your current needs, but these are good general guidelines to follow. 1, 2, 3, 4, 5. Second is setting your opening balances. Each of your asset, liability, and net asset accounts will likely have opening values associated with them, starting points to establish your system. Setting their beginning balances provides the amount which all subsequent transactions are tracked against. Generally, when you set your opening balances, they are one-time set and never touched again. Third, designated versus restricted. Both of these terms are used to explain monies with an intended purpose, but that's where the similarities stop, despite the fact that in many organizations the terms are used interchangeably. Each of these terms are specific. Designated funds. Those are dollars that are set aside by your leadership from the general fund for a specific purpose. Designated funds can also be revoked at any point in time just through a decision by your leadership. However, restricted funds are different. Restricted funds are given by your donors, and they give those dollars with a predetermined, chosen purpose, and those dollars can only be used for that purpose. They cannot be reallocated to any other activities. Those dollars must be spent for the purpose that they were given. Fourth, the importance of budgeting. A very common issue that we find with organizations is that budgets are not strictly adhered to. Budgeting promotes growth, both financial growth and attendance growth. The reason is it establishes baselines for you to follow and to organize towards. In general, we recommend that you follow an 80-20 rule when it comes to your spending versus your income. 80% of your dollars can be spent versus 20% that you receive should be saved in reserves. Now, those reserves can be used for later purposes down the road. That's just up to you and what goals that you set, and then you are saving towards those goals. As you progress towards those goals, it's really important that you also monitor your progress and share the vision for what those goals are. It may be a goal to build a new building. If you're saving towards that goal, whether it's to pay for the building outright or simply as a down payment for borrowing to construct a new building, it is really important that everyone is on board and knows where you're going and when you expect to get there. And budgeting is what allows you to do that. Fifth is cash versus accrual-based accounting. These are, of course, different types of accounting, and it has to do with transactions. In general, accrual basis is considered the gold standard. However, it is slightly more complicated than cash basis. Now, what's the difference between the two? Cash basis is very similar to balancing your checkbook at home. It's monitoring cash in and cash out when each of those items are processed. However, accrual basis recognizes there are more complex details. These details can be things like prepaid expenses. These can be things like pledges, things that are more complex. In accrual basis, this gives you increased visibility as to what's actually happened with prepayments and promises so that you can monitor those accordingly. 6, reconciling bank to book. Yes, this is a manual process. You should do it just like you should do it with your own checkbook at home, and it's very much the same process. You want to balance your bank statement to your accounting books to ensure that all transactions are accounted for in both places if necessary. Yes, it's manual, but it is vital to keeping tabs on every expenditure and on your income. It is also your first line of defense against fraudulent activity that can sometimes occur even in religious organizations. For part 6, we want to answer a very important question. How do I pick the right accounting software for us? So here are some things that you can look for. First, will the system save you time and money? Any process that is more efficient and less prone to error has a direct impact on your finance team's workload and the overall cost of operation of your church. Secondly, you should be able to manage your finances from work or from home, accessing the same dashboards, approval workflows, reports, and information at any location you need. Third, reinventing the wheel. Ideally, you shouldn't have to necessarily reinvent the wheel. There may be changes to processes, but moving to a new solution does not have to mean abandoning the system you use today. It's simply to improve the system you use today. Fourth, are improved vendor relationships. Timely payments and improved invoice awareness can pave the way to happier vendors. And of course, some of those vendors can offer you discounts as preferred customers. Fifth, expanding your financial visibility. Imagine being able to produce fast, accurate, and consistent awareness of your church's financial health through dashboards and reporting. That should be your ideal state, your goal. Number 6, taking the guesswork out of goal setting. Being able to base your church's growth goals on factual financial data and trends. And not only that, but be able to track those goals as you progress. 7, easing frustration for everyone. From people who are submitting expenses to approvers, everyone who contributes to the church's financial process will welcome simpler, intuitive workflows that allow them to focus more on the important service needs of the organization, not just on the financial day-to-day. So as you are searching for a new solution, what are things that you should be thinking about? Number 1, and very important, what's your budget? You should have a realistic understanding of how much the church can choose to invest on a one-time and continuous basis for its chosen solution. Secondly, who's on the decision team? We all like to search for solutions to our problems, but it's really important that when you pick an accounting software, you have to understand that there are various resources from different areas of the church that will be necessary in order to roll out a new process efficiently. These can be accountants, leaders, IT, anyone who may be involved in the process of your day-to-day finances. And knowing who those individuals are and can commit to assist can make a switchover from one process to another far less hectic. Next, what are your must-haves and your nice-to-haves? Of course, we would like every system to do everything exactly the way we want it. That, unfortunately, is not going to be an achievable solution. So it's important to know what are the things that you absolutely have to have the system do, and what are the things that would be great if it did. Also, along those same lines, what type of solutions are you looking for? Are you only looking for an accounting solution? Or are you also looking for an all-in-one church services solution capable of organizing every aspect of your house of worship's service to the community, from finances to people management to planning your worship services to running your website? It's important to know what it is you're actually looking for and how much you are looking to accomplish with a new solution. A very important consideration, the people that you know who are also in churches, what do they use? Rely on their experiences, their direct feedback. What have they chosen? What have they found to help inform you of what choice you may need to make that's best for your organization? And finally, is this something we can test drive? Make sure before you go to the test drive stage, you have condensed all of the options that are available to you down to your top 2 or 3. This gives you the ability to really focus in and try to get all the value you can out of a test environment to help you make the best decision for you.
Well, Jessica, I know that was a lot of information, and I'm sure people are tired of hearing my voice. So why don't you fill them in? What would be their next steps if they have questions or they really like what they've seen today and want to pursue further?
Yeah, first of all, thank you so much, Mark. That is a wealth of knowledge. I think I love the heart of Ministry Brands and not only wanting to provide tools, like technical tools for churches to be successful, but also I love that we are coming to the table with solutions, like industry knowledge solutions. So thank you so much for taking all of the knowledge and experience that you've gathered over the last several years here at Ministry Brands. How many years again have you been here, Mark?
6 at this point, yeah.
Yeah, okay, that's awesome. So thank you for using that knowledge and compiling it into today's webinar so that churches can use it and continue to be successful. So folks, if you are with us and you are interested in either learning more about our financial solutions, because you do have them, right? You already have them. Maybe you've heard or seen something today that you're like, I didn't know that my software that I already have can do that, right? So if you already have Ministry Brands and you didn't know, keep an eye out on your inbox because we will send some next steps and some directives. Also, if you have an account manager, please reach out to them. You can also reach out to our support team. You can email support@ministrybrands.com and they can help you troubleshoot if you've got something that doesn't look quite right, or if you want help, they'll help put you in contact with someone who can help you. Additionally, if you do not already have the Ministry Brands software and you are interested in finding out more, you'll just go to ministrybrands.com. Mark's got it pulled up here, and you can just click Get Demo. And you'll be able to get some more information specifically about our finance solutions. So with that, thanks again for joining us. Keep your eye out for an email from our team, a follow-up email with a little bit more information and some next steps for you. But yeah, we're really thankful for you all. Thanks for joining us. Thanks again, Mark, and everyone have a fantastic day.
Thanks, everybody.